wanted to take a second because we are going to talk about GameStop. I haven't even looked at AMC today, but we'll look at that. So you'll kind of just get my reaction, other than what you guys asked for in the chat. Before we get to the charts, I will say, so you guys know, Roaring Kitty's back, right? He started tweeting again. So far, we don't have a tweet that his account got hacked or anything like that. And GameStop is moving. And coincidentally, so the reason why I actually do kind of like, or I'm watching it this time, was because, like we talked about last night, a couple nights ago, GameStop is buying up a bunch of graded Pokemon cards. So Pokemon still is a big business, but then you have to ship it off, get it graded. It comes back in a plastic case that you have to break open to get undone. Anyway, they're buying up a whole bunch of that, and they're adding cards now into their business model, which would be really interesting if for some reason that's the push. So I'm waiting to see if that's why, or maybe just Roaring Kitty's back. Who knows what it is. But anyway, jumping into it, I want to break down the options chain because this is GameStop. And I guess let's go over my play first because it'll make sense later. So we talked about it this morning. It had gapped up. And then just went for it. And shout out to everybody that made it. Some of you guys bought it at 23, sold at 28. It had tagged out after that push up. I ended up getting in at 28.20. Now it had already based out a little bit back here. So it's like, yeah, you know what? I'll get in. And the premiums did really drive me into this, which I told you guys. I bought at 28.20, and then I sold the 28 strike for this Friday for $720. So that's $7.20 right off the top. So essentially so the 20 actually lines up. So my average cost is $21 on this thing. So for me to lose, GameStop needs to get below this and then go for the gap fill, you know? I don't know the short interest. The last time the short interest was ridiculous, over 100%. There were some brokerages that got stuck to them. Okay, there were some real losses last time. That won't happen again. So I don't know what's going to drive this. Typical supply and demand, right? If the buyers start coming in, options start coming in. Remember, when you buy a call option, right? Let's go at the money. You buy a call option. It's your positive 50 deltas. The market maker that sold it to you is negative 50 deltas. So to be at a neutral delta, they have to go out and buy 50 shares. Remember, options are soft deltas. Shares are hard deltas. That's it. That's what a market maker does. They're not out to get you. That's not how things work. There are market movers. There are institutions. But the market maker, again, is just the field. It's you and the institutions playing on the field. That's it. So when you buy that call, you're essentially buying 50 shares. And now when you buy out of the money stuff, that doesn't mean jack. But it didn't mean jack. So let's say, right here, let's say it's at $18, whatever this price. Yeah, $18. Now, some jack over here, John Smith, he buys a $30 call option. A market maker is not worried about that, does not care about it, is not delta hedged, because it is not a one-to-one. Now, at the money, probably one-to-one, but when it starts to fade up, the less they actually worry about it, because what are the chances it actually hits that, so why even worry about the hedge? But it's not $15, $13 out of the money anymore. It's at the money and needs to be accounted for. So at that point, that's when you get that vacuum up. That's when things can really get going. So on top of short sellers getting out, buy-side activity, you got everybody buying shares because, Roaring Kitty's back. You got momentum traders in here. A lot of buy-side activity in here. Maybe some bag holders finally just wanted to sell at break even. There's a huge seller. Maybe they didn't trust it. Now that it's holding, maybe there's some conviction. At this point, RSI is probably overbought, so we're letting some indicators cool off. Price action-wise, I would really pay attention this time before anybody does get hurt. And hurt because there are people out there that are buying these call options, and they probably don't understand the actual risk they're taking on. I just sold somebody a call option, collected $720 off that guy. Now, tomorrow, if full sends, they'll be up, and they'll get rewarded. But are they getting rewarded for a bad habit? 'Cause if you pull this anywhere else, you're probably going to take on a loser. This is why people are saying, like, hey, are you buying puts? Like when it started to sell off. puts were so expensive, the move it'd have to make, they'd have to announce bankruptcy to even get it that low. So there's one more thing that I actually did on this play, and I wanted to break it down here. So I bought the call, sold the 28 strike for this Friday, collected 720. After I bought the shares at 28.20. Now it had actually pushed up a little bit, and then I had sold the call, kind of just to get a little bit of premium in there, a little bit more money, kind of locking it in. At the time, I think it was like $6.90 if I just flat out bought the shares, sold the call. But then what I did do was I had sold a 30 call. Bought the 30 call. Bought the 30 strike call. So for this Friday, and I'm going to break this down how this looks visually. Because when you start playing this game, there's a lot of options gymnastics, which is what I don't want to mess up. Let's go 30 strike. That's why I want to spend a little time doing this before I go over the market. Let's go over the 17th. All right, so that one we bought the 30. Now we had sold the 28. Okay, so this alone is a bearish call spread. So I will make money if it gets below. Because if you were to take this trade in general, you're going to sell this one, buy this one, you'll collect some money, and it'll be 100% play as long as it expires down here. But I also have 100 shares. So there's 3 points to this one. Because I have shares that are growing with a covered call sold against it, and then I have a spread. And the reason why I did this, now I already messed it up a little bit. I did this because I had shares with a covered call, but I bought this as insurance because if the shares went up after hours and really shot up, I could actually lock in those shares and not be in a naked sold call, because that's what really got some people screwed. If you thought this was the next blockbuster last time and had naked calls sold against this, no shares, no coverage, no nothing, and it yapped up to 300 or went nuts like it did, you had to go buy your shares at market value, $350, $400, and sell it to the guy at $19. So I don't want to be put in that situation. So it gave me a little bit of I can still manage this after hours if it goes nuts. Unfortunately, by the time I saw it, it was also a little after 7, which the market was closed. So I'm still in all three. As of right now, if we open up right here tomorrow, I will probably lock in this one for a profit, because that's just, again, Vega, too much. That'll be a nice profit. And then when it sells off, I'll probably buy this one back, and if it pumps back up, sell another one. I'll still collect the theta on this one. And so as long as I'm in a sweet spot like this, with Vega being up as much as it was, I'll probably just leave that selling. That's it. Let's see. I see what you did. Did you get the 30 call with the money you paid? Money I got paid? Yeah. I can still sell it on Robinhood? Is this on the 24-hour market, or is this closed? Okay, so I just opened up Robinhood. It says a market venue for the overnight trading session allows trading within 20% of the reference price of $35.44. Orders priced outside this band may be canceled. Oh, I can already see things getting weird. Shoot. If I was on Robinhood, so if I'm on Robinhood, I'm trying to think which one would make more. We got a call option. Now, let's go over the call options right here, because this is why people are going to get screwed. This is also why I chose the 28 strike. 28 strike, I had sold for $7.20. Now, that actually bounced around. Coincidentally, it's still here. The options price does not reflect the after-hours price right here. So what is an options contract in general? It is real value plus time value. So right here, this $37 strike, zero real value. This is a coupon. This is trash if it is $36.99 or less. Now, 36, this strike with the shaded area, real value, which means it can't expire at zero, because you'll have whatever the stock is. So at the time when I sold the 28, I had depending on how yeah, so 20 cents because it was 28.20. So I had 20 cents of real value in that contract plus the week of time. So in theory, when I go from the 28 to the 27, that contract should go up $1 because that would be $1 versus shares. Anyway, 720 here. Let's go up $3. Go to the 25 mark. I literally gain $100. I would have sold. I would have collected $100 more in premium, risking $300 more in share value. None of the in the money stuff makes sense right now. That's why I chose at the money because I just wasn't gaining anymore. Now, had that gone up $1 perspective, just with the strike price, I would have sold something ridiculous. I would have sold something out here, covered every bit of it, because if it turned out to be a pump and dump, I would have essentially locked in my money and they were about $600 at the money. $600 just clean out of the gate. Send that thing to the dirt. I would have made every penny. Without actually selling the shares. I would have had it covered, and then depending on where it sold off to, I could have done it the next week and the following week until it actually was getting close to my real strike, depending on how far a pullback. If it were to be a pump and dump, I would have absolutely killed it on that. But that just was not in the cards on this one. Which I thought was very weird, very interesting. So we'll see when they update tomorrow what kind of new strikes we have. And what all happens. I can only imagine this is going to get nuts. So shout out to anybody that does this. Just hopefully, I wanted to take some time to do this because last time this happened, I tried to break it down. And a lot of people, when I told them it was a bad play, they made money on it. So that was their excuse for why I was wrong. And a few people actually took it seriously. They're in my group, and they're killing it now. A lot of this was people's first trade. They didn't understand what they're getting into. And I said, hey, congrats on that. But sometimes one of the worst things you can do is win right out of the gate because you get rewarded for something that's probably most likely not going to happen again. Anyway, so that breakdown. Let's just check AMC real quick. So where we? 151,000 volume, 25,000 open interest. That was already. They already had some attention there. The $4 strike. Premiums are juiced a little bit. Hang on, I need to get that. Where's my green line? So anyway, that's everything I'm in right now. I missed my 7 o'clock sell. And Robinhood says it's at, by the way, here's Robinhood overnight hours. It says it's at 38.44, so it's even higher than that. So we're right around here, breaking the high. So hopefully full send. Hopefully that mistake just ends up being amazing and it's just up even higher. Last time GameStop did this, I traded it from $30 to $60. It was inside like 15 minutes. I was like, cool, 100%, made my money. I'm out. Obviously, I left a bunch of money on the table. But I'm not a what I could have made guy. I am a what I did make guy. Man, so AMC sent it. I can't wait to find out which one Pelosi's in, which one she got in last Friday. You know, it's congrats to Pelosi. You know she's in it. Careful. So, guys, I draw out zones, and that's all fine and cool. It's cool on Tesla, Amazon. You've watched how things interact with those when it comes to the markets in general. But when it comes to pump and dumps, when it comes to attention like this, we could grease right through that thing, no problem. It'll make you think that line was just kind of like, what was it even there for? So careful with this when it comes to momentum trades. Because right now it is you, the institutions, and the market makers. Every week, day to day, it's you and the institutions. That's just kind of how that's the market in general. And then there's the market makers. They're just there, and they make their money, order flow and all that. But now there's that third piece. So it's like playing chess, and then a third person just gets to come in and pick what side he wants. He might even rotate sides. It just adds an extra level of volatility to it. So the only way you can truly get screwed on this is your allocation. You just don't understand what you're in. And because it's a $6 stock, you can afford to buy 1,000 shares. and that's your whole account, and then it turns into a pump and dump. I plan for worst case scenario all the time. I trail it. As long as it keeps going up, hey, keep making me money. When it turns around, I'm off. You guys, you do you. I'm just going to be back here doing my thing. There's other ways to make money. The quickest way to get hurt is to not understand what you're doing. You could be one of the guys on X saying, hey, what's the ticker? Every time Roaring Kitty, I did follow him today, would post something, people were in there saying, what's the ticker? Which one are you pumping? Which one is it? And like, blows my mind. Like, there are things already reacting. Can you imagine if he does say GameStop? It'll probably send it even further. But to everybody that's already in those plays, that front run that risk, they're sitting fine. They could sell and take profit. If they think their position is already on the moon, you might be getting in GameStop at 100 thinking, yeah, go to the moon. To everyone else that got in at 18, that's on the moon, and they're going to sell. And you're going to be the proud owner of a pretty sweet new bag. So just be careful. These do get tempting. Gosh, these get tempting. Because I like to be an option seller. And when people, now don't get offended by it. This usually offends everybody. But I say when stupid piles in and starts handing out free money, I'm there all day. I'll take it. Give me your money. Real quick, because I know someone probably doesn't understand what I just said. I bought this at 28.20 and I sold the 28 strike for $720. Now, come Friday, if I let that expire, I made $700. I put up $2,800 in risk and made $700. Fine. I'm okay with that. 100% okay. The risk is it just sends it south, and I lose more like $2,100. But it would have to go to zero for that. That's worst case scenario. Anyway, please just understand what you're in, and just think of all the scenarios. Not you bought something and the only scenario is it go up, because a lot of people when they're in this, that's the only thing they think about. I bought this and I can't wait to sell here, and they can tell you every way they're going to spend every dollar, but they don't have the slightest clue how much they're actually risking, and that's not important until it is, and then they're in trouble. So just avoid that scenario. That's all you got to do. My favorite thing is free internet money. No kidding. I like free internet money. It's amazing. And just for reference, guys, real quick, made a lot of free internet money the other day. I sold the 185 strike call for Amazon against my Amazon shares for earnings, $185 on a tech giant, and I made $500 or $600. Okay, $185, not $28, and I make more. Just to put that in reference, right? This is crazy. And I just couldn't stay out of it this time. It's at 39.21 now. Ridiculous. A lot of time before market opens. I think it's going to be fun to watch. For everyone that's not enjoying it, sit back, enjoy the show. That's all this is going to be. You're either on this train or not. I don't know if there's any kind of in between here. But let's just see how things unfold. Well, now it's at 40. Tomorrow, let's get into the markets. Tomorrow we have PPI and Powell talking. I just want Powell to come out with a GameStop hat on. A little bit to the side, too. How many of you would absolutely die if you saw Powell come out? You're like, oh, does he have red tie on, a blue tie on, purple tie? Okay, because everyone's like, okay, purple tie, he's bullish. GameStop hat. If I was Powell, 1,000%, you couldn't tell me not to. I would do it just for the troll aspect. It'd be the funniest thing. I could get fired and still laugh every night. I'd pick the mic up and literally off the podium, drop it, and then obviously before I got fired, I'm like, hey, I was just kidding. Let's talk about how we got a bunch of tools in our chest, and we're not going to lower rates. But if something happens, we're going to lower rates. We're not going to raise them. Same thing he always says, but people make it a thing.